Every business in existence is a business partner with the IRS. The IRS does not reward the IRS incentivizes business owners because you help the economy, you make America better. And starting a side business, it'll be easier to make an extra 10 grand a year than it is to save an extra 10 grand a year on fixed income. As business owners become more successful, you get the nicer cars, you get the nicer watches, you go on the vacations, and whatever's left over, that's what we save.
Telling people to get a budget is one of the worst things we can ever tell someone.
What's up, everybody, and welcome to another episode of Cashflow Conversations. I'm excited today. Today's going to be a good conversation. Who here that's listening right now is a business owner? Probably most of the people listening, as this podcast is for business owners on the journey from W-2 to 1099 and how stressful and fun that transition can be. But how many people listening have a CPA that they've used maybe for years that they just aren't in love with? See, I joke constantly that CPAs are mostly like historians. They just look backwards. What did you do last year? Give me your books. Let's look at what your line items are. And as Nick jokes, we're going to put numbers in a box, put it through the software, and that's your tax return. That's not strategy. That's history. So today I have Nick Savoy of Sam727 Consulting, but I'll tell you what, he's pretty close to being a one-on-one consultant for Cashflow Architects, my company, because every business owner I've ever worked with would benefit from talking with Nick. Nick is a strategist when it comes to taxes, and we just got done talking. So Nick Savoy, thanks for being here, buddy.
Yeah, thank you for having me, Matt. Appreciate it.
And right before we started recording, we were talking about how you just saved a client a couple $100,000 on their tax returns.
Yeah, it's kind of crazy. When I jumped into this space, before that, I'd always kind of envisioned the CPA being the person on my team that just knew everything about the taxes and helped me in that space, right? And even when I was a financial advisor a long time ago, I would always say, hey, Matt, we got to get you with your CPA so we can figure out your taxes and things of that nature and shepherd them over there, right? Because I thought that was the person that could help with their taxes. And honestly, the crazy part about it is what I'm realizing is there's a gigantic gap in the financial industry. And it's the most emotional sector about money, which is everyone has a love-hate or hate-love relationship around their income and the taxes associated to it. And are they paying their fair share, right? How many times have you said, I don't mind paying taxes, I just want to pay my fair share, but not sure what that is?
Yeah, if I'm going to give to charity, it probably wouldn't be the IRS.
What's that?
If I were to give to charity, it's probably not going to be to the IRS.
You're not. Your best friend is Uncle Sam. You're not going to just willingly give him money.
Unfortunately, I don't think that they spend it very well, so I'd rather give money elsewhere.
Yeah. So anyway, to that end, I had a friend of mine. Actually, had a friend of mine who has a CPA. They've had him for years. Thankfully, we have conversations, and a couple weeks back, they filed their taxes or went to get their tax prep done, and immediately after they picked up their taxes, showing that they were going to potentially owe about $90K in taxes, I got a text that said, just picked up my taxes and we owe $90K WTH, which prompted me to give him a phone call. And it's the guy that, the husband, it's his business. He just thinks he's a gutter guy and just goes and does gutters. He doesn't care about the business. His wife helps with the money and the aspects of that side. And so I knew I should probably call them both because he ain't going to know the answer. He just picked up the paperwork, right?
Yeah.
And so long story short, I said, hey, let me see him. If you're open to sharing the information, I'd love to at least look at it and see if there's a way we can find some potential opportunities that were just potentially overlooked. You don't know what you don't know. And maybe they just happen to be overlooked. And she goes, I have no problem. We got on the call today, and there's at least $170,000 that we can confidently write off that was going to be taxable income, which that put him in the threshold of about 500 in net AGI. That 170 alone is going to drop him below $330,000 in taxable income.
Phenomenal.
And you think about that, right? For business,
and they paid a CPA to do all of this, right? Like then he texted the CPA immediately saying, "Do not file."
Correct. After we had a conversation, and by the way, they had signed with the intention of filing, but they were curious, so they reached out because they knew I was in the sphere somewhere, but I didn't know exactly what that looked like, right? And so as soon as we got off the phone, she immediately sent them an email, said in all caps, "Do not send. We want to file an extension." in which the CPA, obliged, and they filed their extension form and whatever. But yeah, and it's crazy. We were just talking beforehand. Obviously, the name of your show is Cashflow Architect, right? What's the
Yeah.
biggest thing, the most important thing for any business owner ever is not ROI or rate of return. It's cash flow.
Cash flow, baby.
That's all that matters, right? I look at gross revenue. People are like, why do you look at gross revenue? I said, I care about gross revenue because that means you have cash coming in. Doesn't mean that's what you're netting, but I know you're generating, right? And you think about that situation, could you have used $170,000 different throughout the year?
Absolutely.
That's not life-changing money, but it's certainly like could be life-changing money because you could do significant decisions throughout the year with $170,000 that you were effectively going to owe a bunch of money on tax on and think you're like, now this 500K in net revenue doesn't look as awesome when you look at it. You're staring down a $100,000 tax bill because you pay quarterlies. So they pay quarterlies throughout the year, right? And then they still owe. It's like, I'm looking at a $100,000 tax bill. I no longer thought about how awesome we did to generate $500,000 for our family. I'm looking at $100,000 negative that I write to the Uncle Sam, which is 20%. That's not terrible from that perspective.
Yeah, but they also paid quarterly too. I
They
mean,
also pay quarterly, right?
that is, you know, every business owner knows cash flow is king,
Dude,
and the IRS is on the bottom line of every business annually or
yep,
quarterly. Every business in existence is a business partner with the IRS.
yep.
What a phenomenal way to create value for a business by saying stop losing money unnecessarily. What could you do with this if it was in your bank account rather than Uncle Sam's bank account? Could you? And what's cool about business, the IRS incentivizes so much. The business owners stressed on making the business work. The CPA does tax returns over and over and over. They're not a tax strategist. Bring you in, okay, Mr. Client, would you rather give the IRS $150,000 or pay Nick 25,000?
And you keep a portion of the difference and still
They
pay the
keep
government your fair share.
100%. Yes. I mean, it's a no-brainer. The money has to leave the business. Either it's going to go to the IRS or more stays in your pocket, and you pay a guy like Nick that says you don't pay them XYZ. Here's how you file to save these on the tax returns. Every business owner listening, if you're over $100,000 of income, click the link in the description, set up a free consultation with Nick, and he will help you understand strategies that your CPA is just not teaching you. I mean, we had a conversation a couple weeks ago talking about that one software that we were looking at,
Yeah.
72 different tax strategies for business owners that I almost guarantee that business owners are not talking to their CPAs about. 72 different strategies.
No, they don't know what they don't know, right? And frankly, let's be honest, like there are really good CPAs. I want to make sure I point that out, right? They're very proactive and they do really good work. And a lot of them are great people, right? As people in general. And it's not that they're doing bad work, but a lot of times they just built the business backwards and said, Matt, I'm going to help you. I can help you with your taxes. I'll do your return and I'll charge you a couple $100 a year return. You're like, oh, thank you. I don't know how to put the numbers in the boxes, right? So I start my business. I do it that way. And all of a sudden you pay me and it's like, oh, hey, I'll see you next year. Well, the problem is what? Like I only get a couple $100 and I gotta wait 365 days for you to come back to do it again. I'm not going to be able to like keep a business afloat, let alone a family afloat on $200. So I need to have more people. So now all of a sudden I transition from human to human slowly over time to one to, I need more than one. So I'm going to 10, 20, 100, 250. And all of a sudden, as we're going through that, we're transitioning from a human to human relationship to a human to number relationship, not intentionally, but because we just started doing prep work and returns, that takes a lot of time to go through everyone's documents because Matt's got to give me all the documents and I got to comb through and find all the numbers because you probably don't know what numbers I need, right? So I'm the one that's going to have to go through and say, all right, there's the number I need in every single document. And all of a sudden they get to 1,000 clients and now they have, what do they have? A bunch of people and no time.
Mm-hmm.
And so now they're doing the easy work of doing the tax prep and it's not easy, it's still hard work, but it's just time suck. And they can't get off the train to say, hey, Matt, you're the one client of the 20% that wants and desires strategy because you are a business owner or an investor or a high income earner where you're continue as your income goes up, what goes up with it in just our normal mindset, our tax bill. And we don't have enough. We don't know how to get off the train of being in the rat race of just return to say, Matt, hold on, like we're changing the strategy of our company. It's going to look a little different. I have to charge you more for it, but here's what you're going to get. We're going to get a lot more meetings throughout the year instead of one time a year, so we can get a better understanding of like what you do to help you look through the front windshield, and be proactive versus a rear windshield or mirror, excuse me, and be historical and not have the time to adjust, right? And so that's where I would even say, high income W2 earners are also in the same boat. I just met with a market president for a bank who intentionally reached out to me, didn't have my number, got it from a close friend of ours, wanted to sit down and talk about taxes. I think he knows a few people in our town. He reached out to me and I said, we met. He goes, what? I said, what's going on? He goes, I need to figure out this voluntary tax game. I said, okay, well, he goes, I just went and shrunk my election down to basically get all the money, as much money in my pocketbook, every paycheck as possible. He goes, but I'm clearly doing something wrong because he donates, okay, charitable donations to viable 501c3s that can document, right? And doing donations from an IRS perspective, you better know what you're doing because it's a gigantic red flag through the IRS of like, what are you donating to? Are you just gifting that money and trying to make it a deduction, or like what? It's got to be substantiated, right?
Yeah.
He like enough as a married couple that they were able to itemize their deductions, and he's going to receive a 5-figure tax return. So he goes, clearly I'm missing the boat because I'm overpaying by that much.
Wow.
And he said, so what do I do? And I said, simple answer, you're not going to like it, is become a business owner. He goes, that's it? And I said, well, the tax code is designed for investors and business owners. So yeah, that's at least the first jump we need to make is we got to figure out a business that you can do to help us offset some of that tax liability by stimulating the economy voluntarily through our own private entity.
So glad you talked about that. The IRS does not reward W-2s or savers.
No.
If you're just
self-employed.
If you're saving in a retirement account, you're not helping the economy. You're helping Wall Street. You're kicking a tax can down the road in this fake account that isn't even yours. The IRS incentivizes business owners because you help the economy. You make America better. And starting a side business, it'll be easier to make an extra 10 grand a year than it is to save an extra 10 grand a year on a fixed income. And the IRS incentivizes all of it. So find out how to become a better human being.
Do you know why they do that?
Right.
Because they realized in order for us to move our economic position forward, the only way to get things done was through the private sector, not the public sector, because there's no bureaucracy involved in the private sector. You're a business of one. If you understand what the government, and then we don't have to agree in all of the tools that they say, hey, this is moving the U.S.'s position forward, right? We may not be in love with alternative gas or solar or oil and gas or housing or whatever. It doesn't really matter, but they've already identified the things that they believe pushes our economic positions forward, right? If we can just embrace that, we do that, we jump into that pool just for the benefit of pushing our economy forward and serving our people, our communities, they give us things back. We had credits and then tax deductions. Just think of it as a thank you note, because now they don't have to spend all the time and energy trying to convince a mass amount of people to say, hey, we should invest in housing for low income. We should do Section 8 housing for low income, desolate areas that they just can't have housing. How is that going to happen if it's in the public space? There's going to be roadblock after roadblock after roadblock. We all see it, everywhere in our communities. I'm in a community right now where data chip centers are coming, one's coming into town. It's going to explode our community area, right? From a revenue, dollars coming into the county, right? You and I both know there's a lot of unhappy folks because their neighbor just went from farmland to a massive data center and they're not happy.
Yeah, I have a good friend in Michigan who was trying to broker one of those deals in the town, hated it. And this is a good community member, generationally speaking, like generations they farmed in this town, created a lot of value for that town, and they completely turned on him. Ended up not going through with the deal, which I think ultimately was a bad decision for the town.
When you think about it, it's interesting you say that, right? Because, and you and I both know, like, it's hard to truly make those decisions. Most of the time, I do think we often try to come from a place of good. Like, we're trying to move our position forward, right? And even when you get into business, you're trying to move not only your position forward for you and your family generationally 3 times over, but your community, right? And people that you love and care about. But what comes with that is just a lot of heartache and big challenges to get to overcome. And so I completely lost track where I was going with that. Oh my goodness.
About how to make the community better. Like, as a business owner, it's not just about making money.
No, it's not about making money. Not at all about making money, right? But it's just, you look at those things and it's like, oh my goodness. And tax savings, and it's a two-part problem. We have to care. If I'm a patient in my own health, yes, I do trust a doctor, but I can't put all the trust in the doctor. And how can I truly say if a doctor is a really good doctor or a really bad doctor if I have no semblance of how to stay healthy on my own, or even ask questions when I go and say, hey, Matt, I'm here to see you today. Like, I have this thing. I saw this on, even if it's on AI or whatever, I saw something that says I could do X. How does that align with what we've already got going on? But at least I'm coming in prepared. And now they see, oh, you're a student. You're wanting to learn how to be better, right? So we have to be better people and being more intentional about our money, because we work really hard and we deserve to have it. We also deserve to spend it because we're blessed in a country that has, great, you know, military systems that keep us safe from all the noise that's going on elsewhere. How is that funded? It's got to be funded somehow, right? I don't agree with all the way that we're spending money, and that's, none of us are going to ever be happy from that perspective. But tax savings also doesn't mean we're going to get a tax, return back of X every of the dollars, right? But we have to go in educated. We have to care, because the less we know, we can't just push it off to someone else and make them accountable for our missteps.
I used to work with a CPA that would say, the less you owe, the less you know, the more you owe.
That's it.
So your background, you were in the financial world for a while.
Mm-hmm.
You saw this common mistake that people are overpaying money on taxes,
Yep.
saw the void in the market and said, all right, I'm going to solve this one problem.
Yep.
And you are extremely excited about it, which I love. I cannot
Yep.
wait to introduce you to some of my clients who I think would benefit drastically. Because in our business, we see lifestyle creep. So as business owners become more successful, you get the nicer cars, you get the nicer watches, you go on the vacations, and whatever's left over, that's what we save after we pay the tax.
Yep.
Well, if I can reduce my tax bill, that allows me to save more money immediately.
Mm-hmm.
And how then can I capture all of these inflows in a way that my advisor can help me understand the inflows and the outflows, and then set up a structure so that not only you save more by eliminating some tax bills, paying yourself a salary on a monthly basis. How many business owners go like this with income every month? It's different. My wife, that's the thing that she hates, is like, some months are great, some months we don't do much at all.
Yeah,
and
then she's mad at Matt. She's like, Matt, can you just find us some stability? I need to figure out how to balance like our lifestyle here, bro. Like, you're causing more chaos than good, right?
100%. She goes, we need a budget. I'm like, budget's it's a scarcity word. That's a swear word.
I was just saying, by the way, to that end, real quick. I think a budget, telling people to get a budget is one of the worst things we can ever tell someone.
Yeah.
We need to understand how to have a cash flow budget, because every month changes. Every single month is different, right? February has how many days? 28. July has 31. So how can the budget be the same?
Yeah. But having
to be cash flow managers of our, even on the W-2 space, I get X coming in, I get Y going out, because now I can be nimble enough I'm aware enough to know, hey, I get $4,000 in.
Yeah.
This month I might spend $3,500. The next month I might spend $3,000 because of situations and seasons and all that. But being mindful of cash flow, to me, is a heck of a lot more important than saying, hey, Matt, let's go create a budget, and then it's static, and it's like, well, shit, the next month's not static to the last month we just did it on.
Yeah. And so what we try to do, because in cash flow, we talk about inflows, we talk about the inflow of different incomes that we might have, but capturing it all together so that we can create this reservoir that can grow. And when there's a surplus, it doesn't go to lifestyle. We get to choose. Do I want it to go to lifestyle, or do I want to create an investment that can maybe cash flow to generate the lifestyle that I want?
Yep. How do we have it do both? Right.
Exactly. So
And I
money
think,
in
and by the
motion.
way, to that end, if you earn it, we deserve the lifestyle creep to an extent, correct?
Mm-hmm. That's why we're
But it's
doing
just
it.
premature, right? And I think also too, I think the challenge for business owners, especially if we just did a side hustle, is we still are in the mindset of as an employee, right? So if I Uber you from your house to the airport and I charge you $50, oftentimes I'm going to say, "Oh, I made $50." But in reality, did I really make $50? My Uber company made $50 in gross revenue, but I need to factor out my expenses to get you to your house, to the airport, and back to my house, and the car, and all that stuff that was required to make that trip happen, right? So
Mm-hmm.
at the end of the day, I probably only made $20. I didn't make 50, and that's where the side hustle, or self employment is a sector, right? That's the worst place to be because you operate from the mindset of an employee. You take on all the risk, and we don't think about, well, what are that I created expenses that I can, or have personal expenses that I now was able to transition to a business expense that I get somewhere between what, a 20 to 30% discount on the true number, because I can write it off against the active income that I produced in that business.
Yeah.
And I mean, I see it, but it's because of the mindset. It's not, you're still a business owner, but we don't think of ourselves, oh, I'm a 1099 contracted employee. How many times have we heard that?
Yeah.
No, the 1099 is a form that I get. And yes, I partnered with Matt's firm, but Matt pays me a 1099. Matt doesn't have any control over who I am or what I do or how I show up, right? I get the branding, I get to use the marketing rights to Cashflow Architect, but I have to go build it. You can't even give me like a database of people to go call and say, hey, go call these people. I have to go create, plant the seed, water it, harvest my own business. It's a franchise at the end of the day. Well,
Yeah.
like in layman's terms, agree?
Yeah. Yeah. So number one, we're talking about a lot. Number one, the inflows are the incomes, the outflows are money you never get back. And before we just have lifestyle creep in these outflows of money that I'll never get back, how can I invest to subsidize my
Yep.
lifestyle? So you saw this void in the market
Yep.
in taxations. How does someone work with you? What does that process look like?
Starts with a conversation. And the conversation is, I want to know who you are. I really don't care what you do. Because personally, I don't want what I do to be someone like labeling me as who I am. So I want to know who the people are and start to actually build a relationship and get to understanding, like, why are you doing what it is that you're doing for yourself, for your family dynamics, for your community? Like, why? Right. And then within that, like, what is it that you're trying to go achieve in the future, right? Maybe I want to be a nomad and travel the country and not really have a true home. Or maybe I want to homeschool my kids and travel the country and not, again, have a primary residence, but not have to be, anchored in Lafayette, Indiana, right? And learn and experience life and create memories. Well, I got to be able to, I got to be nimble to be able to do something like that. So, we got to understand that the money is just a tool to fund whatever the ambitions and purposes are that we want to go do in life, and ultimately make impact, right? Serve and make impact. And so that's where it starts. And then from there, it's getting an understanding of what they're doing from a financial perspective, and ultimately creating a blueprint. And the blueprint doesn't have money on it. It's just the ingredient list of what you already have in place between entities and legal and assets and liabilities, and then separating, organizing them visually, so we can say, hey, Matt, your ingredient list says you have an eighth of a teaspoon of cinnamon, and this a little bit of vanilla, and this and this and this. And oh, by the way, but in money terms, this is actually income, and this is actually an asset, and here's now how these are taxed, because they're two different things, are not the same. And then be able to say, hey, this is how this should go or flow or into this reservoir, so where when life transitions, you can ensure multi generations of your family tree are intact to flourish and make massive impact down the road, right? So it starts with creating a blueprint just to get organization visually of what we have, because everything in the financial space is number related and the what. Hey, Matt, I need life. I just heard I need this life insurance, like whole life insurance. It sounds cool. Like I should just go get it, right? And oftentimes, or I need this IRA, or go into start a new company. I'm an employee in the company. They get me into the HR department. Hey, here's all our benefits. Jump into the 401k. Jump into this. Jump into this. Telling me what to do with a universal why. Well, why? Well, because everyone's dumping it. Well, okay, cool. But how does that matter why does that matter to me? Or why should I be more intentional about considering that being a good decision in my world? And so what I end up trying to do is flip the script to say, hey, this is why this should matter to you personally, and we should intentionally consider this much higher than what we had before. So then when we go make those what decisions, we're confident, and we now pause to say, when I go start my next business, how should I create that? Is that a passive business in real estate, or is it an active business where I have to roll my sleeves up? And should I be a sole prop? Should it be an S corp? Should I be a C corp? Should it be a nonprofit? Like what we have we're forcing ourselves to slow down and be like, I wonder where that fits in everything else that I have going on. And then now we have this blueprint. That's our guide that allows us to make confident decisions. And we're not just we're transitioning from making money to understanding how entity, legal, financial, tax, liability decisions are all intertwined and connected, even if we silo them out by working with our CPA and our professionals. And they're doing a great job. They just stay in their lane of doing what they do, because in the financial sector, this SEC, if you're tied to to a broker dealer or in the investment space, they have a lot of regulations on what you can and cannot talk about, right? Taxation is one of those that you got to be very cautious as to what you say, because I say something about tax and you get a $5,000 tax return, you're going to come back to me and say, well, that guy said I was going to get a $5,000 tax return. I could have just said, hey, Matt, did you realize you're going to be exposed to FICA tax at 15.3% in self-employment? That looks like self-employment tax because it is, because you own a business. I didn't tell you how much you owed or we're going to get back. I'm just telling you, sharing knowledge and information so we're aware of, like, hey, there's 15.3% tacked on to your tax bill above in your state, federal, local, whatever that may be in your situation. So we got to be aware of it, right? And so that's where it's creating that guide. So now we can have business owners creating a durable and sustainable business and lifestyle, and most importantly, have confidence that they're doing not just really good work, but exceptional work. Because I think sometimes as business owners, we kind of joked about this before we jumped on, we feel really good about what we do when we see the impact we're doing in our community and the blessing the lives of our employees and things of that nature. And I might have a $1.5 million business and I net a 30%, net profit, and I get a, $500,000 in net income to my family to do stuff. And then all of a sudden I have a $100,000 tax bill on the back end of that I think it's a surprise, and it's not really. I all of a sudden forget about all the really good work and worry about this $100,000 tax bill and be like, man, I thought I was doing great work and it just stinks, right? And so now all of a sudden you get in this point of like, maybe I shouldn't make more money, or I shouldn't go find more people to help or sell more, trinkets and widgets, which to me is kind of the craziest idea ever, because the moment we stop building business or selling things is the moment the revenue stops. And if the revenue stops, what happens to our lifestyle? But we're stopping because we're scared of the tax bill going up.
Yeah. I mean, I've had conversations with friends like, I make a bunch of money. I don't even want to make more because most of it's going towards tax.
And think about how crazy that is.
I know.
You're literally stopping doing what you maybe love to do because you're scared for every dollar you make. You went from 25 cents to 75 cents a dollar.
So when you work with clients, I'm assuming the first meeting is a consultation.
Mm-hmm.
Is there areas that you could improve in their lives? And then is it like a fee-based process? Is it a one-time? Is it an annual? How do you work?
So there's flexibility is always key. And I don't I have metrics in my head. I don't lay out a specific. I do have some structures, but like everyone's situation is so variable and so dynamic that you need to have some flexibility there. But what I would say is it's generally a one-time fee to build the blueprint. And then there's even just before that, there's another step of like, hey, maybe you're not ready yet, right? You have some fuzzies in your stomach of like, I think I'm doing some good things. I'm not sure, but I think I'm missing some stuff, but I'm not mentally ready to like take the jump and actually act on some of the things yet, right? Because I got a lot of noise and chaos going on. We're in the season of in the truck or the business is flourishing and we don't have time to sit down and actually make some changes, but we feel like some things we just want to get a checkup, like going to the doctor, like, hey, I feel a little like in my stomach, right? So we can do a one-time, like just an audit, basically say, hey, this is the business and lifestyle checkup. Just get very brief data, good data, but brief data. Say, hey, this is Matt's scenario with Cashflow Architects. Matt, I just noticed we're missing out on opportunities that you have no income protection, you have no insurance protection, you have your entity structure is kind of set up like this, which is open to risk. These are some red flags I'm seeing that maybe you don't need me to help you implement. You can go do some of this on your own in a DIY fashion, right? And then let's check up in 90 days and say, hey, were we able to knock off any one of those things off the list, which then opens the door to say, hey, now we can jump into this blueprint. Let's actually organize the game plan and understand what we do have on our currently in our sphere. And then how do we forecast and project that out to say, all right, we want to add all these things over time. And so that blueprint is a one-time fee. And then it's, from there, be the guide. And then I charge a consulting fee to be the guide to make sure that one, just stay accountable for you, for the person, right? And I look at it from the same perspective that I look at physical training. Do we really need a physical trainer? No. You and I both know what to do to work out, right? Drink water, stay hydrated, eat healthy foods, get some exercise, and you're probably going to be in fairly good shape, right? We pay the personal trainer because we stink with accountability.
Right.
Right. And so it's the same from that perspective for what I do in that space, but also it's just continuing to remind, hey, Matt, you have kids. Are you aware that you can hire your kids in your business under the age of 18 and it's a massive benefit to the business? The money stays in the house, but it lowers your taxable liability. But maybe you're not ready to make that move yet from a strategy because you don't have the revenue to support it, right? Well, putting it out there, now it's through the front windshield. You have an exit down the road. We're just not there yet. You need the reminder to be like, oh, yeah, I remember that one. Or, hey, we talked about this one. Are we ready yet? I don't know. Let's look at it. And so we're pulling getting the business owner to transition to consulting afterward to one, coordinate and work with the professionals that they have on their team or that they need to be introduced to have on their team to execute, putting in place the what's that they don't have, right? And then keeping them accountable and constantly being mindful of what strategies are currently out there that they can take advantage of or what strategies that they don't know about that they need to be putting on the radar till they can have permission to go make more profit.
Yeah, I love it. I love it. So everybody listening, if this is interesting to you, this is exactly what we do. We look at your inflows, we capture them, we teach you how to save first, invest first, and then increase lifestyle. And the easiest way to do that is to stop overpaying on taxes. So if you want a free consultation, click the link below, set up a call with Nick and or myself, and take control over this. Stop waiting for your CPA to come with a parachute to save the day when they're doing the same historical work that they've done for years. I've gone through probably 7 CPAs in 10 years. And I like all of them, but they were not strategists. And this is one of the first times I get excited talking about taxation because Nick is a strategist, not a historian.
And take it from a business perspective, right? Have you ever had moments where throughout the year you always have just kind of that thing on your shoulder being like, oh crap, like I got this tax thing to deal with down the road. Like I'm going to have to deal with the consequences of doing what I do, but I don't know anything about anything. It seems confusing and I don't know where to turn. Like, have you had that? I've had that.
Oh yeah.
Right.
Every year.
Every year, every day. It's like, well, crap, like what the hell? Right. So yeah, no, it's, and it's not, I'm not the only person. Matt's not the only person. Business owners honestly need to be equipped with a good estate attorney, a really good business attorney, a tax preparer that's proactive and understands, a bookkeeper for sure, a very proactive bookkeeper that understands how to educate business owners, us, on how to categorize expenses the right way, right? They need a financial advisor, not because they can't do any of this on their own. We just don't have enough time or the mental capacity to know everything about everything and then go execute it.
Yeah.
But ultimately, we have to have somebody be the quarterback
Yep.
that
Yep.
is our advocate in all those relationships, so that we're making sure that all of those decisions align and are connected versus disjointed and pulling the whole damn thing apart.
I would say the architect instead of quarterback, but I totally
Okay.
agree with you because think
Financial
about all of
architect right here.
yeah, all of those professions are separated. You know,
Yep.
most people have those people in their bag, but do they talk to each other? When
Well,
was the
no.
last?
So take that a step further. How many appointments, Matt, do you have per year with the professionals in your team?
The professionals on my team? What do you mean? Oh, yeah,
Or
no,
you as a
they don't
business
know
owner?
each other. They don't even know each other.
Well, but I'm saying, how many meetings do you have with all of those people, even in a siloed experience, one on one?
Multiple,
And I think you think about it, how many meetings should we have with those people?
a lot.
Probably 30,
Yeah,
25 to 30 a year, 4 times a year, right?
yeah,
And
tops.
yet, how many people are having one or two? And they're not even sure what the heck they're meeting about, right?
Right. And they're separate. You know, the attorney doesn't know the advisor doesn't know the CPA.
Correct.
And some people like that. Like I do know a person who's like, he has three different financial advisors and doesn't want any of them to know what he has. Interesting case. I think that it lends to a lot of mistakes and not maximum efficiency. But if you're looking for maximum efficiency, having all of those people together, just like a family office, I mean, people should have
Yes.
all of these tools in a one-stop shop where they can go and say, "Here's all my stuff."
When we hear about family office all the time, and we just believe, right? You and us in the middle tier bracket, middle income, right, or even the lower income, we hear about these people have family offices, but we naturally say, oh well, that's only for the 1% community. That is for the $100,000 household family. You can have it on a much smaller scale.
Well, think about it. That's when efficiency is most important because they don't have as much extra to lose or to give
Sure.
away or to the IRS.
Yeah,
And so
you don't have an
when
extra
you're,
10 grand just to kind of, oh darn it, I made a mistake, I paid too much. Okay, we'll get it back next year. No, no,
yeah,
no. You don't have 10 grand.
maximum efficiency is more effective in that middle range, not the ultra high net worth. But the
Mhm.
ultra high net worth usually are the ones that it's left to that. There's more money for the advisors there, so I get why they cater to that. But most of my clients are making under $1 million a year, more than $250,000, and they don't feel rich at all. And if you look at the stats, they are doing very well compared to 98% of Americans. And we can have a big impact with the efficiency there just by managing the inflows and the outflows.
Yep.
And the biggest outflow is tax.
Well, there you go. And that's the difference between, every bracket is, I tell this to friends of mine. They're like, "What's the difference?" It's like, it's a game. It's rigged. I said, "No, no, no. It's not rigged. It's the same game." But I'll tell you, the ultra wealthy figured it out through the same trial and error that you and I are trying to battle, because they got burned. And they said, "Wait a minute, we got to find someone that helps us understand that code." And so they still pay tax. That's what I wanted to help to share, is that, at least that's my belief. Everyone still pays tax. They just pay tax different. And so they figure out, what does the government want? What does the government already predetermined to incentivize us investing in? And if we do it on the private space, that incentive is that incentivized, like, investment comes back in a thank you note, which is either a credit or a deduction from the government. And you can have both working at the same time. If I go do certain things, they will give me credits, which is a dollar for dollar return on whatever I spend, and they will give me deductions. And it's not an either or. I could use both at the same time.
Yeah.
So they just started reinvesting what they were going to spend to the government and stroking the check to say, oh, I'm going to go start another business or buy more housing or whatever the case may be. That they realize from a strategist, probably, then they have them on their team. Like Robert Kiyosaki has one. He's
Yeah.
had one for a long, long time.
Yeah.
And they work together a lot. Because
All
Robert
right.
said, "Go, I'm going to go do it." And he said, "How do I make that happen?"
Yeah. So before I let you go, what's the biggest mistake that you see that business owners are making?
Living with the excuse that they have to work in their business all the time. And they don't know how to separate what's working in it versus what's working on it. And in fairness, no one's wrote a book to tell us, Matt, this is working on your business. These are the tasks of working on your business. And these are the tasks of working in your business. What I do, what you do is helping business owners work on their business. And it's contrarian and it costs them money, but so they're separating themselves from the business and making the revenue like, oh, I got to go get that client. If I don't get them, I'm not going to make any revenue. And then everything falls. No, what if we probably are 10xing business because now we're being very intentional about wanting to understand what's going on in our world. And I'll end with this. My wife's made the comment one day, but she doesn't understand money. And it was at the dinner table and I caught some ish for it. My response was, because we were with our kids, no, you are very educated. You know about money. You just choose not to learn about money. I caught some heat on the back end naturally, right? But now my son heard that. The next time my wife said it, guess what my son said? No, Mom, you just choose not to learn.
Nice little riff you created there.
Yeah. But again, at the end of the day, like that's the laziness and just the lack of wanting to be accountable for our own stuff. Just to be aware. Don't be the expert. Just be knowledgeable enough to challenge our professionals to say, hey, Matt, I heard this. How does that work in my world? I don't know. Amen. Let's roll up our sleeves, give Matt his creative power, which is where he excels, to say, you know what? I don't know that answer yet. Let me get back to you with some options.
I love it. Nick, I'm looking forward to this, man. Saving hundreds of thousands of dollars that otherwise would have gone to the IRS goes right back into the pockets of the business owners who are making the economy a better place. You do good work, bro.
Slow down, make more money.
Amen. All right, everybody, thanks for listening. Thanks for listening for this. Make sure you leave a comment. If you have a question, drop it down below. I watch all the comments on YouTube and Spotify. And if you are a business owner, if you want to capture more income, if you want to save more on taxes, if you want to understand the outflows of money that's going and leaving your world forever, capture that somehow so that you can invest and then increase lifestyle. Set up that free consultation call below and look forward to meeting you. Nick, thank you so much for your time.
Thanks, man. Appreciate it. Have a great day.